the whole world of biometrics is not new. We've been looking at biometrics in various guises for a number of years. And if you look at physical biometrics, actually, you can go back to the 19th century and people started using fingerprints for law enforcement purposes. So, Christoph, do you want to tell us a bit about how you view physical biometrics and what's the sort of cutting-edge trends in the industry at the moment?
Okay. Particularly about facial authentication, you have probably seen that now there is a clear shift in this industry going into this direction. So you have seen all these major announcements made by MasterCard, Google, Microsoft, etc. It's all about, say, so simplicity, user experience. It's all about making, at the end of the day, the user experience as simple as possible and natural. So Neil was insisting on the user experience. This is definitely the right direction. And that's why the less you are, I would say, asking the user to, I would say, to follow a process, to make an effort to get authenticated, the better it is, right? So what we observed is, at the end of the day, for financial services organizations, you've got 5 criteria. I mean, five key added values. The first one is about the user experience. Second one is about security. Third one is about universality. The fifth one is about cost effectiveness, and the last one is, of course, about data privacy protection. So the race, or say the most important challenge, is all about finding out the best trade-off regarding those 5 criteria, right? And at some point, so physical authentication and particularly facial authentication, I would say, is definitively say a promising direction to go, because we can provide a very good trade-off regarding these 5 criteria. So this is what it is. Yeah.
So would you say, for example, facial authentication embedded within a broad spectrum of biometric services, say combining with the behavioral biometrics that Neil outlines?
Yeah, I mean, well, I don't want to anticipate your next questions, but typically it's really about, I would say, finding out the best, again, trade-off between the different, say, way you have to authenticate somebody. And so typically, if you've got a combination of, say, 2-3 authentication factors based on, for example, the natural behavior, there is one sentence that I particularly appreciate, is to try to authenticate, I would say, the user, say, in background, so transparently for the end user. And this is typically this kind of say approach that are, to me, that really makes sense. And typically one can easily imagine that in the future you've got a combination of say of solutions where you are on one hand analyzing the behavior of the user in background, and on the other hand you are automatically, say, capturing some selfies or facial authentication, running some facial authentication in order to seamlessly authenticate the user when transacting or when making some specific actions with his mobile device.
Mm-hmm. And so, Nick, I believe at WellPay you've been doing some trials around a range of biometric methods. What are you seeing in terms of early results from customers on this?
Yeah, that's right. So, well, there's 3 examples I was going to give. So the first was we recently ran a trial with finger vein technology rather than fingerprint technology. Finger veins really cool for lots of different reasons, not least of which the fingerprints are latent, so you can leave your fingerprints behind on stuff. And also, if I were to hold up my hand, there's cameras at the back here, and this guy here with a high-definition camera, and he can reproduce my fingerprints, right? The beauty of finger vein is that it's a little scanner, it shines an infrared light down your finger, it builds a biometric from the blood vessels. You can't leave that behind. Also, if you chop off my finger, the fingerprint is the same, but finger vein, the blood vessels collapse, the biometric pattern is changed. So we ran that actually in our staff canteen in Walbrook. Didn't chop anybody's fingers off, although the temptation was there. What did we find? Well, so we found, interestingly, we were using it as single factor So it was just paying with your finger. You registered your finger, you associated it with a payment instrument. People really liked it. Interestingly, it displaced cash and card. We were expecting it to displace cash, but not card. It pretty much displaced both in equal measure. Enrollment is really hard, so that's where we found the drop-off. And that's true in all biometry. Associating that biometric with the real identity, that's really difficult. And then the other thing is people didn't like sticking their finger in the reader because they didn't know what else had been on that reader. That was kind of interesting. So that was the first. The second, actually, so you'd be familiar in the UK and across most of Europe, but not in the US. When you put your card in, you enter then a PIN, right? Into the PIN entry device, we call it. And we had this thought, well, if you're looking at the PIN entry device to put in your PIN, we can look at you. So this was a much more kind of background biometric. We put a camera in that PIN entry device. Forward-facing cameras now can be tiny. It was very difficult to see. When we put that into quantitative testing, we found that consumers didn't notice it. And then when you explain that there's a camera in that PIN entry device, they hated it. And they hated the feedback, their confidence would fall through the floor. They didn't want to use that device. And then when you explain you were going to use that to reduce fraud on their card, we got this really unexpected result, which is that their confidence level didn't return to where it had started from. It went above that. They became more confident about using that device than they had been to start with, which we were very surprised at. And then you said, we can use that for other things as well, because we can do gender analysis, we can do sentiment analysis. Were you happy or you were sad when you were making the payment? And then confidence again. Consumers really don't like that. So that's kind of interesting. So you can use biometrics, but only for authentication. And of course in the UK, actually, when you go to an ATM in the UK, you're almost always photographed. When you walked into this building, you were photographed. We're the most surveilled nation in the world by some measures. The third thing, just very quickly, was associated with biometrics, but actually using your social identity. We made an investment in a company called Verido earlier this year. And they aggregate social identities like Twitter and Facebook and Google Plus and so on to build a kind of credibility rating for you. And that's fascinating as well, because that's not using physical characteristics, but it's using other kind of digital fingerprinting. The amount of information that you expose through your Facebook identity in particular is quite extraordinary. And we can build a very interesting, very strong model of how real you are and how long it would take to build that social media profile. So those are 3 different trials that we've run in the last 12 months.
Great, really interesting. So I guess when you think about this technology, to me the false reject rate and the false accept rate are critical factors both for the firm's confidence and for the consumer's confidence and usability. And Neil, you've clearly got a very scaled application of the technology currently. What are you seeing in that regard?
Well, it is, as I was in my talk, that there's no silver bullet. You can't take one thing in the security layers. Device identity or the password or the transaction amount or the time of day, geolocation. They're all individually not sufficient. So we kind of stack them together. And that's where we reduce this false reject rate. And again, it's kind of like a barometer that the customers say, our banking. Say, for example, we deliver this to the US military and they're going, we can annoy the customer every 5 minutes if we want to, as long as this thing's very secure. But in a consumer-facing thing, it's like, I'm not really sure we need to do that. Can we just force an SMS or a one-time password 1 in 10 times or 1 in 100 times? Where's that factor? So it's kind of about the user experience and the context it's in. But yeah, clearly, we'd love if this behavior was the ultimate solution, but it's not. Neither is the FAIN, neither is the... and there is things like customer pushback on them. Sometimes the customer wants to see the safe and wants to have a feeling that there's some security there, wants to know that all these things are part of it. So sometimes actually, reminding them that there is security behind needs to happen too. So the false reject sometimes is actually forced by some of the customers to remind the customers that they're looking after them.
Very much that question of, as I say, getting the trust in the consumer by showing them some of the technology, but equally a risk appetite question on behalf of the firm as to where do you want to set those parameters around false rejects so you're not artificially deterring too many customers, but equally not accepting too many false customers. I think it's a really interesting balancing act, and I think really interesting question how firms will play off those trade-offs over the coming years.
Quite a lot of the use actually is not necessarily in real time, it's after the fact. It's when there's a challenge. You know, hey, I didn't buy those sneakers. And you go, yes, but I think your son did. It was in that location, it was that address, it was that account. It is your account. And they can see it. So sometimes the false reject or false accept is not necessarily in real time. It's after the fact.
Mm-hmm. And so I think you put it pretty neatly around you want to minimize risk and maximize user experience, and there's a degree of trade-off there. So with the Payment Service Directive 2 legislation and the strong customer authentication, which requires two-factor authentication on transactions above a fairly low level, I guess that's kind of imposing some specific parameters around that risk and UX trade-off. And Nick, be interested in your views on that.
Yeah, so I'm sure there probably isn't a payment professional in the room who hasn't spent much of the last several months obsessing on PSD2 and strong customer authentication. So, you know, I mean, I think at WorldPay, we welcome further increases in security of the e-commerce channel. I guess, you know, in an ideal world, what we'd really like to see is a risk-based approach. So exactly as you said, I mean, and Neil, you touched on it as well. It's about choosing both the appropriateness for the channel or the customer. Different customers have, as in different people who are trying to take payments, have different appetites for risk. And also for consumers, there are circumstances in which consumers really want to know that things are very safe, they're very secure, or they want that. We talk about invisible payments. You know, there are certain consumers who absolutely want to have an explicit decision to make that payment. And yet at the same time, there are others, you know, who really value the friction-free payments. So I'm guessing many of you in the room have used Uber. And that's a fantastic example of a completely invisible transaction. You order the vehicle, you get in, you've linked your Spotify account, so your music starts playing when you get in the car. Did you know you could do that? That's really cool, by the way. You should do that. And then you can, and you get out and you rate the driver, and they rate you. And there's no payment experience, right? It's a completely invisible payment. Now, if you mandate strong cardholder or strong customer authentication, that kind of experience goes away. You've got to put the payment experience in there somewhere. So I think for us, it's about finding that balance. You know, we want the environment to be safe, but I guess the ideal scenario would be that that's done on the basis of setting a target. So challenge the payment industry to say, you know, get disputes down below a certain level, and then let the market work that out.
I think clearly the conversation's gone in, and I think there's a lot of views being put in that regard. There's an article yesterday on FinExtra about the chilling effect of tougher authentication rules potentially on the industry. Equally, I think there's an opportunity for fintechs, if it does go ahead, to provide the best possible solutions to the major firms with regard to authentication. So there's always opportunity and downside in all these things. On the topic of downside, though, I guess we're talking a lot about positives here and nice invisible journeys, balancing risk and user experience. So I referenced Minority Report when I came up, and Tom Cruise having to take his eyeballs out and get some new ones to avoid the iris scanners. Clearly, the commonly said thing is that if you have your voice stolen or your fingerprint stolen, you can't change it. Questions that I guess the whole panel already, given the topic, is so important. What do you think around security, potential for people's biometric footprint to be compromised, be it physically spoofing fingerprints or be it the underlying code?
Just on that, we do get asked, it's kind of like at meeting 3 of our sales process when we were at the analysis, and somebody goes, oh, hold on a minute here. What about, you know, the law? And there is European-wide law around biometrics. And the essence of it is actually, if one deciphers the very complex legal statements that the European Union have, which I guess you guys might not be needing soon, but it's in the idea is that you can't take that biometric, it's one thing, and use it for a purpose other than it was given. So if I give my biometric to authenticate a bank payment, the idea that that bank could categorize me based on my age or potential illnesses I have my race, my sex, whatever. If you're profiling after the fact for that, that's where the scary big brother comes in, and where people are right to be concerned with it. And it's not just when they do it. It's not as if I logged into the bank and said, hey, you're a certain age, here's an offer. It's not in real time. It's now or any time in the future. So the storage and use of that stuff needs to be very, very, very well thought through. And brings huge responsibility for the banks or the FinTech organizations who get involved in that. Luckily for a behavioral, we're doing a swipe. There is no ability to tell age, sex, illnesses, and that kind of stuff on it. So we're on the right side of the fence in that regard. But it is a big concern of anybody looking at biometrics. There's an overhead and a cost and a process needs to be in place.
Any other thoughts from Christoph or Nick on security here and
Yeah, I mean,
issues in that regard?
from a technology perspective, important is at the end of the day is not to directly, if I could say, store your biometric print for the reason explained here or highlighted by Neil. And really now I would say that you won't see anymore any digital identity, I would say, platform providers storing directly your biometrics, right? So it means that clearly the trend is to use what we call in our jargon a one-way hash. So it means it's a representation of your biometric data. So even if somebody is in position, right, to potentially steal this biometric pattern, what can you do with it? It will be extremely hard to extract information from this. And by the way, everything will be anonymized. So in most now systems available in this market, all data are absolutely anonymized. So it means that, say, each platform, they only, say, store at some point this biometric pattern, but in any other data. So it means that all your confidential data, I mean, your sex, name, birth date, etc., all these data remain in the hands of the service provider, so your banks your bank or insurance, etc. So it means that it will become extremely difficult at some point to spoof such a system. And on top of this, there is also a clear direction where solutions are storing your biometric or a representation of this biometric print locally, I mean, in your mobile device. So this is what we observed. So, I mean, the chance, again, to spoof, to hack your profile are becoming very, very low.
So, in a second, I want to open up to people in the audience to ask questions. We are very conscious we stand between you and drinks, so we don't want to delay things too long, but if there are questions, please do have them ready. I'm going to ask one final question. Perhaps I'll come to you again, Christoph, and then you, Nick. So where do we think we will be in terms of day-to-day penetration and adoption of biometrics by 2020?
I'm going to go first? I'll go first. Okay, so I mean, we are seeing this trend across the payments industry, moving away from kind of authentication that's deterministic, yes or no, PIN was right, PIN was wrong, and into a world of probabilistic. So, the chance that the person trying to make that payment is Nick is 70% or 90% or 95% or 99.99%. And for me, the organizations that will win here will be those who can give that accurate view of, well, what is the chance that this is an impersonator? So that then there's choice. People can make decisions about how much risk they want to take. Where do I see biometrics by 2020? I think you'll see them pretty much ubiquitous on mobile devices. I think you'll begin to see them appearing in other places as well. So possibly at point of sale. There's some work going on at the standards bodies that look at terminals to look at whether biometrics are appropriate. There's a lot of biometrics being deployed in the Far East, and a lot of the devices are also coming out of the Far East. There are also a lot of tourists coming out of the Far East as well. So I think we will see more biometrics. I still think that in 2020, many of us will still be putting in the card and putting in a PIN alongside using a mobile device or using other biometrics. And then the e-commerce channel, I think that's probably where you'll see greater penetration of biometrics over the course of the next 3, 4, 5 years.
Christoph?
Yeah, I would say I'm sharing the same point of view here. We won't change, I would say, bad habits, if I could say, by just snapping our fingers. So definitively, in 4 years from now on, I mean, we still have to use some passwords and PIN codes at some point. Now, that being said, what we know is that, I mean, the mobile device revolution is happening, is there. And here we have to think globally, right? I mean, it's not only about the UK or Switzerland, like small countries like this, but if you think about, say, the 5 continents, there is a huge demand and very fast adoption of mobile devices. So it means that here the driver is clearly your mobile device will become at some point your security token. We are at One Visage, of course. We believe that the market will go into the direction of facial authentication, and particularly in 3D, because it's the next natural step for biometric as a main biometric modality. It doesn't mean that other biometrics won't exist. Again, it will be, say, a smart combination of different authentication modalities. Probably the great news, or based on what experts are saying, is that we'll see very soon, say, stereoscopic cameras or 3D cameras embedded into your mobile devices. I mean, coming with in front, right? So we believe that this will give some acceleration, right, to the adoption of facial authentication. But again, here with to provide a safer and simpler solution for mass markets. Now, it doesn't mean that, again, regarding other segments or business cases, of course, there will be other, say, biometric modalities that will be more, say, adapted, suitable for your business case. Yeah.
Great, thank you. So questions from the audience. Do we have any lurking out there for our panel? Got one here, please.
Sam from the app business. This is a question for Nick. It's not quite on the exact subject. You mentioned the social side of things you're looking at. Is there 1 or 2 bits of data you would always hold back from putting on your social profiles, just from what you found?
So, I mean, the specific company we've made an investment in, what they do is they essentially aggregate the public feeds from those different social media. So what they're actually really trying to do is work out whether it's the authenticity of your social media, because obviously, I mean, you can buy Twitter followers, and you can have bots that will write Facebook profiles. So that's really what they're looking for. They're looking to figure out whether the social identity is real or not. As to whether there are particular characteristics that I would advise you not to expose or not. I think if you're of my generation, some of the people in the room who are younger than me, I mean, I think, to be honest, my information's been scattered everywhere on the internet. What's really interesting is that my eldest child is 14 and my youngest is 5. And the first computer lesson, IT lesson, that my now 14-year-old had at senior school was how to stay safe online. So they have there's a generation of children growing up who will be the next consumers who think about their personal information in a completely different way. How many of us have put in our real email address to get Wi-Fi in an airport? By the way, which is crazy. Why do that? I now it's always bob@bob.com when I'm in anywhere like that. But there's a generation of children who I think when they become consumers, they'll be making much finer judgments about trading information for service, because we've taught them, which is a good thing.
Great question. Any more out there? Probably got time for one more, please.
Christoph from Camp Little. As a question for Christoph, you mentioned about hashing of the data. The typical thing with a password is if you lose a password, then you can just reset it. Could you rehash your biometric data in the same way?
Okay, so I will give you another answer, or say reformulate at some point the answer. you will be at some point. You should understand that your say identity will be bind to your mobile device. Well, again, in this at some point, this is what we are seeing. So at some point, it's a first authentication factor. So you will always be, as a first say recovery step, you will always be in position to enroll once again, assuming that somebody has say, stolen your mobile device, and enroll again, right, with a new mobile device, and in that case, of course, disable, if I could say, the previous mobile device. The good news with facial authentication is that your face is changing over time. So it can be seen as a disadvantage, but it can be seen also an advantage. So in our case, we believe that this is a benefit, right? Because you will be in position to enroll again, and at some point after probably 2 years or 3 years, in any case, your, if I could say, face profile won't be valid anymore. Because there will always be some smart evolution, right, over the time with your face.
Quite a long way to guess, though. Sort of changing password might be sort of a few minutes reset, but 2-year reset on your face is kind of punchy. But clearly that is the downside potential. I guess that's where you're getting at, is sort of that. What is the potential to get at the underlying encrypted data?
Yeah, so if I can ask a follow-up question. Neil, you mentioned about the legal aspects and what you're allowed to do with that data. I mean, under the new data protection rules that are coming into force in about 18 months' time, biometric data is sensitive personal data, so it has much higher standards around the security and holding of that data. Question for all, I suppose, is whether you think that business models will start to emerge around the handling of that data. So in the same way that there are institutions that hold the credit card data and give us sort of a tokenized version of that, so that people don't have to do PCI compliance themselves. Do you think the same types of business model will start to arise?
Yeah. Actually, you're on point with that. Speaking as a non-Swede living in Scandinavia, there's been a migration to kind of not a national identity as such, but a kind of electronic identity backed by the banks, both in Sweden and Norway. There's a thing called Bank ID. And so the banks decided they were not big enough to have full security departments. There was no competitive advantage in each of them operating different security systems. In fact, there was huge business opportunities if they worked on a common platform. Very Scandinavian, sit around a round table and have a consensus. And so this bank identity then has a knock-on effect is that the people with that responsibility, and so more and more organizations, including the tax authorities, and even when I, tell the school my daughter isn't going to be in today because she's sick, I will authenticate. It's the banking system that's being leveraged and piggybacked on. And basically it's because a lot of institutions went the handling of security and the password hell and user identity and registration and all that stuff. Why not outsource it to identity providers? So we've seen in critical market, Swisscom are operating, Deutsche Telekom are operating, Lux Trust in Luxembourg, and the banks in the Benelux area as well are combining and essentially getting a business out of being an identity provider, a trusted third party is the old description from security back in the day. But I think a lot of it is to do that a lot of organizations are going, this is way too much responsibility to be handling these things. Let's let the professionals do it. And so you're connected with LinkedIn, you're connected with Google, you're connected with Facebook that we were speaking of. I think when there's value behind it, particularly FinTech value, you're going to find organizations kind of taking on that responsibility and doing it very well. I haven't actually here in the UK kind of seen any of that. Each of the banks still, but they're huge, have their own organizations. But the downside is interoperability and one place to fit everything and stuff like that.
One of the interesting things about identity is that there's more standards than you can shake a stick at. So there's FIDO and there's EIDAS and there's OpenID and there's like Antara and there's lots. And I think what we'll see is convergence on a handful of those. I'm not sure we'll converge on a single global standard. The interesting question for me is whether you'll see an emergence of a handful of really big players, and I'm thinking, for example, the tech giants, like a Facebook or an Apple or particularly a Google. Or you'll see, I went to a fantastic unconference in the last, about 12 months ago. Are there new business models in which we as consumers can actually stay in control? So we master our own data, and we are in control of that, and it's for us to decide who accesses that rather than some huge organization. I mean, I know where I'd place my bets because I know where the commercial strength is, but that would be an interesting thought experiment, wouldn't it, if actually you were in control of your own biometric data or your own identity data?
Okay, so listen, we're out of time, and I think a really good place to actually on digital identity, which is kind of the big question for the next 5 or 10 years around all this stuff. So thank you very much to Nick, to Christoph, to Neil. I think really interesting discussion, and we'll hand back to Jeremy.